70% of China's wealth is in real estate. And you just had the biggest Chinese company, real estate company,
Country Garden.
Country Garden.
Yep.
Yeah, their profits are down 96%. You have people not paying their mortgages. You got to understand, China, people buy a condo and they start making payments on it before the condo's built. And so, of course, over time, these builders, take on more people that they can build condos for, and et cetera.
Okay, everybody, welcome to the Angel Research Podcast. We are here as usual today to discuss the market's hottest stock stories and investment opportunities. We've got Mr. Christian DeHaemer on the show.
Hey.
Christian is the founder and managing director of a number of investment advisory services, including the Bull and Bust Report and Launchpad Trader. Chris has been in the investment newsletter game for, 25 plus years?
Something like that, yep.
Okay, he is a seasoned commentator and stock picker who has made some pretty impressive predictions over the course of his career. One that sticks out to me was a recent call on the top of the S&P 500, or the market in general, I guess, in December 2021, and that was within about 3 weeks or 100 points of the S&P 500's peak, which I thought was pretty impressive. Overall, Chris is just a really great guy to listen to for anyone who's interested in the macro environment. And let's face it, the macro environment is pretty important to pay attention to right now. And that's what we're going to talk about today, everything going on across the globe, and kind of just, how to take advantage of all of the recent chaos as an investor. Per our usual disclaimer, nothing that we say here today is personal financial advice. We can give you guys tools and insights, but we cannot make trades for you. Also, like, comment, and subscribe. The engagement really helps us out. Chris, welcome back to the show.
Oh, thanks for having me.
It's good to have you on. Last time that we were here, we kind of touched a little bit on the theme of deglobalization, but today I kind of want to dive into that topic a little bit deeper. You and I have been kind of riffing for the past couple of weeks and days, trying to figure out what this whole new world order looks like, as far as economics and trade goes. And specifically we're kind of we've been searching for, opportunities and pitfalls for investors. And one thing that has become pretty obvious to me in this, in preparing for this discussion is that it is a very complicated one. Because everything is so interconnected. So I was thinking we could kind of break this conversation down by country or region. Mm-hmm. And obviously there's going to be a little bit of overlap, but just to kind of organize things, I was thinking we would do it that way. And I was hoping we could start with China.
Well, China's in a bit of a mess right now. The biggest problem with China is it really has two problems. One, it's in a tremendous amount of debt, and the other one, it's depopulating incredibly fast. Somewhere over probably 3 or 4 years ago, the U.S. became younger than China is. I mean, everybody's familiar with their, one-child policy and their lack of having females as babies. And so that's been going on for so long that the adults who can have babies now aren't there, and so they can't have babies because there aren't enough women to have babies and repopulate the culture. And they say by 2030, there will be more retired people in China than there'll be workers. And that's 8 years away. And that's devastating when you start to look at, population pyramids and things like that, because the young people obviously buy stuff. And then when they get to middle age, they save and, are sort of the financiers of the whole population. But once you hit retirement, you get out of the stock market, you go into bonds or gold or whatever, and you start spending that incrementally.
Yeah.
And so what you have is, your population, your countries run into significant problems.
Okay, so I find you're pretty bearish on China overall, which is interesting because I feel like, maybe for the last decade or so, and maybe more recently, we kind of hear a lot about the whole Chinese century,
right,
which is this idea that China is going to overtake the U.S. as a dominant world power. Why do people think that China is so powerful when in reality they actually do have a lot of these kind of economic issues that are going on?
Well, because China had, since 1978 when they decided that, greed is good and, capitalism is a good thing. And then they went on, this massive miracle of, economic growth of 10% a year. But that stopped, 2 years ago, and now they're talking about 4%, and because you can't trust any numbers coming out of China, it's probably 2% or negative 1%. I mean, you have 70% of China's wealth is in real estate, and you just had the biggest Chinese company, real estate company,
Country Garden.
Country Garden.
Yep.
Yeah, their profits are down 96%. You have people not paying their mortgages. You got to understand, China, people buy a condo and they start making payments on it before the condo's built. And so, of course, over time, these builders, take on more people that they can build condos for, and et cetera.
And I'm sure the aging population issue that you mentioned earlier is tying into that. Like, did they basically overbuilt, they overprepared?
Well, they oversold.
Okay.
But they didn't everybody's seen the ghost cities and all that stuff. But, yeah, so they sell the down payments. We're going to build this, but then they never get built because now these builders are out of money, right? And so the people who bought these have stopped paying on it, which, just makes it more of a downward spiral.
Okay, you mentioned the banking crisis to me the other day. Is that kind of like tied directly in with the housing crisis, or is that being caused by other issues?
Yeah, sure. It's all tied together. I mean, I think their total debt is something like 550% of GDP. Something crazy, the largest in the world. And the thing is, just the Chinese government runs the banks and runs everything, and so they tell the banks, well, you have to lend more money, to get these buildings built, and let's keep the whole thing going. But, it's a giant Ponzi scheme, and eventually you run out of money.
Sure. So
the yuan's falling off the table,
I was reading an article this morning about, like, someone was talking about the yuan becoming the reserve currency in X amount of years. China has this plan. Do you ever see that happening?
No, of course not.
Okay.
I mean, it will. I mean, there's the whole idea that Russia and the BRICS forming but, they're all going to cheat, and it's never going to really work.
You think a lot of that's kind of that fear and that worry is overblown, you would say?
I don't think it's a worry at all, yeah.
Okay. Speaking of overblown worries, or, potentially not overblown worries, how do you think that this economic pain that China is running into impacts the situation in Taiwan? Are they in kind of too weak of a position to get involved in a military conflict, do you think? Or does maybe this being in this point of economic pain kind of push them to a point of desperation where they want to move on Taiwan to gain leverage?
Yeah, well, I guess that's a big question, is how much pain is, how desperate is. I don't think they're there yet, but they're, the last play of a dictator is to, do the nationalism and, declare war with somebody,
Sure.
The Falkland Islands or whatever. And, they've been rattling sabers for a long time, but, there's 100 miles of water, and, are you willing to lose 100,000 men or whatever, to invade Taiwan? And then Taiwan's mountainous. When the U.S. In World War II was island hopping to go to Japan, we didn't go to Taiwan because we didn't think we could take it, because it's all mountains and, strategically easy place to defend. They'll lose the cities and all that, but,
Okay, let's shift focus a bit. I kind of want to. I just want to keep the conversation moving, because we're trying to touch on so many different countries and regions. So I kind of want to transition to the other side of the world with a bit of a segue from China. So kind of in addition to the banking crisis that you mentioned, the property crisis, the aging population, there is another major trend that is putting pressure on China's economy, and that is increasing labor costs.
Yeah.
So for years, China has kind of been referred to as the world factory.
Right.
But you have kind of been predicting that that status is going to be diminished, and that at least one other country is going to start taking on that role. And one of the countries that you're very bullish on for that is Mexico. You said to me the other day, you said Mexico will be one of the fastest growing economies over the next 30 years. So maybe you could kind of give us your thesis. Why Mexico? And then maybe get into which industries in particular do you see thriving?
Well, Mexico? I think Mexico is going to work itself up the manufacturing chain. They've already have. The basic difference is Mexico is a young country. They're younger than the U.S. They have a good population. They are, the borders on NAFTA. I mean, they're here with the United States and Canada, and they, it costs $400 to ship something from Tijuana to the East Coast, and it costs like $10,000 to ship the same thing from China.
Yeah.
And so you have that right there as, a basic reason. And you also have, a country that's, like I said, it's younger. They're all of our cars are made down there already, and they're moving up the value chain. And I just think they're the lower. I think the GDP per capita is like 14,000, which is equal to China now. And so they're going to do the mid-level manufacturing that is currently done by China.
Gotcha. Are there any specific industries? Like I know you mentioned the automotive industry. Is there anything else that you think is gonna thrive in Mexico?
Well, I just think that sort of thing. Those durable goods and things of that nature. Yeah.
Gotcha. Are there any specific investment opportunities you like in the region or stocks?
Well, at the moment, I'm not particularly looking so much at Mexico itself right now. I'm sort of waiting for this bear market to kind of flush some things out. But there's always CMEX and things like that. There's a couple of oil plays down there. They deregulated their oil market, and but then they came back on the other hand and didn't let them get their permits and stuff. So we're sort of waiting on that to work its way through.
Okay. Do you see Mexico kind of fulfilling this middle tier factory role for the whole world like China has, or do you see them kind of being specific for like the NAFTA, the trade bloc?
Yeah, well, what I think was going to happen is the U.S. Won't be policemen of the world, because I don't think we want to send our kids to, go fight and die for some stupid war anymore. I mean, you can see this in recruiting numbers are down like 17,000 a year or something for the Army and stuff. So you have this idea that, I mean, there's no reason for us to be the policemen of the world. We're the smallest industrial top tier country that imports and exports. Our biggest trading partner is Mexico and Canada, and most of that is oil. And so what I think is going to happen to the world is we're going to run in this area of deglobalization, and we'll have parallel economies. And so, like, what you'll have is like France will go back to its old colonies and build trading relationships with that. They're already, Europe is already in Africa, signing oil deals and developments and things like that. And they sort of ramped that up, once this Ukraine war happened. And so French Foreign Legion is in Yemen to establish their supply of natural gas.
So do you see like three main trade blocks, kind of like Europe, NAFTA, and then like the BRICS thing, or?
Well, no. Mate, the problem is that Asians all hate each other. The Koreans hate the Japanese hate the Chinese hate.
So you think cooperation is a tough sell over there?
I think it's a lot tougher than it is in North America. I think North America's has lines up perfectly. We have the food, we have the energy, we have transportation, we have large, waterways. We have the largest waterway in the world, in the Mississippi Delta, river system. And we have two large coasts, so we can trade with both partners. So, and, China has to get their oil from Saudi Arabia, which has to travel like 8,000 miles through like some very difficult straits, that are easily blocked. China doesn't have a blue water navy. I mean, you have all sorts of these issues that, should incidents arise, there's going to be a problem.
Okay, so in addition to Mexico, are there any other countries that you think are kind of going to benefit from this whole like China, decoupling?
Well, I think, I think there's a whole lot of countries in Africa, like Kenya, like South Africa, like Zambia, that have oil, that'll get this oil developed and do really well. I know a number of oil companies. African Oil is a good company, and they own a ton of oil. It's $2 stock. It's crazy undervalued. But there's also, I think Colombia might be a big winner for the low end if, this new socialist government sort of threw a curveball at me, but you know,
Sure.
but after 20 years of war, and they want to get going and things like that, and they seem to be there.
All right, so we have a lot of these other countries that we believe are going to kind of become sources of cheap labor and like lower and middle tier manufacturing. But
Right.
as far as advanced manufacturing is concerned, my assumption is that the United States is going to be pretty critical here. We just had a kind of a major stimulus for the semiconductor industry. I don't know if you saw, but there was like some news that broke today about the U.S. banning advanced chip
NVIDIA,
shipments, and so
yeah.
NVIDIA, maybe AMD are kind of going to get hurt as well here. Are there any? Because I feel like that's ultimately like it is bad for AMD and NVIDIA, but are there any semiconductor companies or semiconductor maybe models that this is good for?
Oh, sure. Well, I've discovered, I mean, it's for my readers, but I've discovered a company that's, only based in the U.S., makes semiconductors, is Department of Defense certified, real small cap. They're starting up. They make unique chips for specialized things. So it'll be good for a company like that. It'll be bad for, a whole range of companies. I mean, what we really have here is a whole nother story, but it's a technological Cold War against China.
Yeah.
And so you have companies like Apple, which I believe is 7% of the S&P 500 or something, that has 99% of their productions in China.
Sure, I think it makes sense then for basically any company that's like already established and has like these like really deep roots in international trade is going to suffer, and then like someone who's like up and coming and just like starting out in this environment is going to be a little bit more nimble. They're going to have some sort of advantage.
Well, anything it's going to use a lot of energy and has a high technology that might be, banned. Imagine, 10 years ago thinking you're going to ban chips from China. That's crazy. And then all of a sudden they're going to do it. And, what about Qualcomm that like gives the chips to Apple? What about, Broadcom? What about, I don't know, Taiwan Semiconductor, but, they do a tremendous amount of trade with China and so
Yeah, that seems like a ticking time bomb.
Right.
It seems like I would be very hesitant to hold that stock.
Yeah.
What about robotics and automation as kind of another alternative to this increasing price of labor issue in China? Are there any robotics firms that you see kind of gaining some sort of dominance in the U.S. or just North America in general?
Well,
even Europe.
Fanucs, the Japanese big robot company, and iRobot just got bought out, right, by Amazon.
By Amazon, did that go through?
Oh, I don't know, but I don't think you can buy them anymore. And then there's Boston Scientific got bought out a while ago. I don't know. We're running out of robot companies. You got any? You got any left?
Yeah, I got a couple that I like, but not really prepared to talk about them, to be honest. All right, so you mentioned earlier about the U.S. kind of being relatively isolated from an economic standpoint, at least compared to a lot of other countries. But you also mentioned that there are companies like Apple that are like pretty deeply established. What companies or industries in the U.S. do you see as like pain points that investors should be aware of?
What's going to go down here?
Yeah, like who is like so kind of interconnected? Yeah, what's going to go down because of this kind of like split between the East and the West?
Yeah, well, those I mentioned. That's
even outside. I know you mentioned a lot of tech companies. Are there any companies in the automotive industry?
Well, Jeep pulled out, of China. So I'm never a big investor in automobile companies because I don't know, they seem to never go anywhere. And except of course Tesla,
sure,
which I'm not buying either.
I think they've had their peak, their prime. I mean, we'll see, but
right.
I'm sure there's a lot of Tesla lovers that are going to hate on me saying that. But
but if we're looking at just dominant trends right now, I think the market's going to go down, and I don't think the pain's here yet. And so it's kind of hard to buy anything knowing that you can buy it cheaper later. I think the exception to that is oil and energy. We've seen a run in uranium stocks recently. I really like the oil tankers because we're going to be selling Europe a lot of oil from the Gulf.
Yeah.
And it's got to get there somehow. And as they roll off their contracts, they're going to be demanding more and more money, and the profits are just going to go.
Okay, so speaking of kind of the U.S. developing a bigger role of exporting energy to Europe, what about LNG? Do you have any kind of commentary on that?
Oh yeah, well the LNG, I mean, it just went up 1,000% or whatever, the price in Holland, and then it crashed back down pretty well. It's down like 50% from its highs. But I think I think what you're going to have is, I mean, they're talking about you're just going to have to reroute all those supply lines, and they're either going to come from the U.S. or they're going to come from Africa, and they're talking about building a Trans-Sahara pipeline and all this stuff, but it's pretty enormous task. So the difference, there's still a huge arbitrage play between Louisiana and the Netherlands. It's like $40 or whatever it is. So part of that's going to be picked up by these tankers.
All right. Kind of nearing the end here, but before we close out, I kind of want to maybe touch on Russia, because it's kind of like an elephant in the room. Is there any sort of what's your opinion on Russia, and then do you think there's any kind of investment opportunity surrounding all the situation that's going on there right now?
Well, do I think there's investment opportunities there?
Or maybe just related to the situation?
Yeah, I mean, the only thing you get out of it is if you have the problem with Russia is that like all the brain trust, ExxonMobil and the Shell and all the people that were there producing their oil have left, and so after a year or so, when everything starts to break and the pressure eases up on their wells and all that stuff, then they won't have anybody to turn to, and it's got to drop.
So Putin, did he make did he screw up? Like
Putin made a tactical error. I don't even know what he was doing. Well, I do sort of. He has to, guard these like entrances to Russia, through these valleys and whatnot. But it's he obviously made a tactical error. Yeah.
Gotcha. All right. So anything else you want to plug, or anything you think that is kind of critical for our listeners to hear before we sign out today?
No, I'd just say, keep your powder dry, and we're not at the bottom yet. I think we got, at least another.
What are you doing with your portfolio? Are you kind of like, are you trying to sell everything and go heavy cash? Or?
I have been selling a lot,
yeah.
And I have been going heavy cash. And most of my portfolio is in oil and energy these days, and so.
Yeah. But you didn't pull like a Michael Burry and sell everything.
I sold half.
Some people, it's actually probably not a bad idea.
Yeah, well, you never can tell.
Yeah. All right.
Got to hedge your bets.
Chris, it's been good talking to you.
Been good talking to you, Jason.
For everyone else that's watching, please like, comment, and subscribe. The engagement really helps us out, and we'll see you next time.